You're listening to Spill the Sea with Ashwati Ramesh.
Welcome, Harshit. Super excited to have you here.
Thank you so much for having me here.
Of course,
Yeah,
I was quite excited to bring you on because there's such little activity happening in climate fintech, especially in India. So, really excited to have you here and hear your story.
yeah. Thank you so much. Super excited to see that somebody's interested in knowing what's happening in climate fintech. It's definitely an exciting space. Lots of things to learn, and we
Yeah,
are learning it as we are going into it now.
yeah.
So yeah.
So, tell us about how you sort of got here. What's your journey like? What have
Uh-huh.
you done before joining
Correct.
Pyse?
Yeah. So I come from Haryana. Spent most of my time there. Um, 16 years. Then moved to Bangalore.
Mm.
While I was in Haryana, no, I did not have a lot of clarity in terms of what I want to do after this. I think Bangalore definitely helped me out with that. So very thankful to the city. I did my bachelor's. I wrote a quick anecdote there. Uh, like a commerce student, like every commerce student, I decided on writing CA, chartered
Right.
accountancy. So I wrote the CPT exam for that.
Oh, you did?
Yeah, there are a
Okay.
couple of subjects in that, right? So there's economics, there's quants, there's accounts, of course, it's CA
Yeah,
accountancy.
yeah.
So, and the results came out, and I did a 99 on economics and a -2 on accounts. Yeah, so that's how I knew accounts is definitely not it,
Not your
and
cup of
not
tea.
not my cup of tea, and that's how economics started.
Right.
So I studied at Christ here in Bangalore. I did my
Mm.
economics there. I met Professor Vineet, who's been my guardian in terms of research, all the research work that I've done, and that's where I grew into what research really is, right? So graduated from there. While I was at Christ, I wrote 2 research papers
Right.
around the themes of macroeconomics, particularly. Then I went to Erasmus in Netherlands to do
Mm-hmm.
my MSc in econometrics and
Okay.
a minor in international economics. And my thesis was built around climate finance. So one of the projects that I was
Back then.
working, yes, yeah. So one of the projects that I was working on, we were trying to figure out what's a better way to capture GDP while including in it the future cost of consuming non-renewable energy resources now.
Right.
Because the cost of non-renewable energy resources are increasing over a period of time, right? So there would come a time where it's inefficient to use them, and it worked out. The numbers made a lot of sense. So I was in Bangladesh for a while presenting the paper for a World Bank forum there,
Right.
and everybody really liked it.
Mm.
And the idea went on to becoming the base for how a lot of climate finance, microfinance is now looked upon now. So
Mm.
that's been a super interesting journey there.
Yeah.
During my time in Netherlands, COVID happened.
Yeah.
So parents were like, "Why don't you come back to town? Let's spend some time together." So I
Mm-hmm.
moved back to Bangalore, and one of the nights I was cooking dinner for them.
Mm.
Just came from Europe, so some fresh pasta
Right.
from them. So made a batch of I think cream cheese and spinach ravioli in an aglio olio sauce, and they loved it. My friend was there,
Yeah.
and he came up with the idea, why not make a summer project out of this, right?
Mm-hmm.
So then we started this company called the Artisanal Pasta Company.
So
Yeah,
just before you continue that, I remember
yeah,
when we first met,
yeah,
I don't know how we got to talking about it, but you ended up challenging me
yeah.
on who would make the better
Aglio olio.
aglio
Oh, yes,
olio.
I remember
And
this.
at
Yeah.
that point, I had no idea what your background was.
Wow.
And I
Yeah.
was like, yes,
Yes.
I'm going to win.
Correct. But we're
That
gonna
never
do.
happened.
Yes, we need to do that sometime now, though. That'd be
We,
super interesting.
I'm
Yes.
happy to eat it.
Yeah. Well, I mean, yes,
I
but I
don't
would love
think I
to.
stand
I
a
would love to
chance.
try your aglio. Fun fact: I have defeated an Italian at an
No
aglio olio
way.
competition, so I count with that pedigree of knowing what I can do that.
I recede, I concede defeat. I'm just there to eat.
But we should do a cooking session sometime, though. It's really fun.
Yeah, we
Uh,
should.
so Tapco happened, the artisanal pasta company. Then started as a summer project. The idea was that we'll run for 2 months.
Yeah.
We'll sell fresh pasta to people in the society. It was COVID time, so it was very difficult to set up supply chains around it. And things started opening up,
Mm-hmm.
and then people really enjoyed the product in the society that I was living at that time, at that point of time.
Yeah.
And then we started selling in Bangalore.
Mm.
And soon after that, we were supplying to 6 states across South and Central India.
Wow.
Yeah, to a few restaurants, to a lot of people spread across there. So it was a great journey.
Amazing.
And yeah, so one of the dinners that I hosted, so I'd host these dinners once every 6 months to get friends of friends to come.
Yeah.
I'll experiment on food. Some of those things would go onto the menu of Tapco.
Okay.
And one of these dinners, I met Kaustubh and Vinay. And Kaustubh and Vinay now
Right.
are my co-founders with me at Pyse. And so that's
Okay.
how the journey
That's how
to
you all
Pyse
met.
has been till now. Yes, yeah. So,
Awesome.
yep,
Amazing. So, after doing all of this, you've spent a fair bit of time in research.
yep,
You've spent some time in the food
yep.
space. What got you interested in?
Now, I mean, from how I look at it, the few things in my life that I found that I'm really passionate about, right? So,
Mhm.
food's definitely one of them
Yeah.
because I spent so much close time when I was learning new skill sets.
Mhm.
So, a lot of my personal development journey happened through food,
Right.
and a lot of my structural journey happened through Pyse. So, in terms of understanding how the VC side of things work, how the business side of things work, so a lot of affinity towards climate and finance as a whole.
Right.
So I think that's where the head at right now. While I'm at Climate Fintech in the space, right, I would love to do things which makes it more accessible to a normal being out there. That's a challenge
Yeah.
that they're facing right now. That a lot of people that I speak with, they don't understand what it is, right? And that's something that we need to solve for. And
Mhm.
that's my idea with today's conversation as well. That
Yeah.
we bring in a few insights to the people who are listening to the podcast to understand what's actually happening at the back end. And it's not as scary as it sounds.
Yeah.
It's not that difficult to learn. So,
Yeah.
and once you're through it, you realize there's so many opportunities in terms of investment, in terms of understanding, in terms of accepting this as a way of life.
Yeah.
And I think once you get into them, then it's not a point of whether you do this or that. It just becomes who you are at the end of the day.
Yeah.
Yeah.
Maybe this is sort of a good time to talk about what you guys actually do.
Correct. So at Pyse, I'll tell you how the problem statement came up, right? So we were working with this company called Dexler Energy. They're a solar EPC. What that means is they set up solar projects on people's rooftop, right? So a client goes to them, gives them money, and they set up a solar rooftop plant for them. All of a sudden, they don't have to consume electricity from the grid. A majority of their electricity comes from the solar project. It's cheaper now. It was not as cheap back then, and it's a much more proven technology now than it was 4 years ago when we started. So one of the challenges that they got, and this is mid COVID, right? So a lot of companies were running short on cash. They wanted to save it for the future expenses. Nobody knew what's going to happen. So one of the companies came to us and they asked us if we can set up a solar project for them, but they wanted to do an OPEX structure for it. What that means is they want us to come up with all the investment on the plant, and then they pay us for the electricity that they're consuming. So the immediate option that we thought of at that point of time was banks, right? So we went to a few banks. We spoke to them that we like financing for a 300 kilowatt project that in rupees translates to about a crore. And we waited 9 months to hear a no. And that's when we realized there should be a more innovative idea to solve for this problem, right? We had the numbers on what the revenue would be from the projects, what the operational costs are on the projects. So it just made sense. And the returns looked really nice, So we decided that why don't we pool the money that we have, get a few other people to come and invest in this, and start distributing returns to them. And that's how Pyse started. So the core of the company is to decentralize access to green projects. And primarily green projects because one, the returns on the green projects, and that's the part that sells, right, uh, are high enough for people to take that risk of investing in a new industry. And second, the impact part of it is really, really important. And I think that's what a lot of people miss, but a lot of awareness being created about it now. So I could not be happier. So even so now, if I speak to my 21-year-old sister, she understands why it is important to have a solar plant, right? Beyond the part of understanding why it leads to savings or why it's cost efficient, but just why it is really important for us. And I think the summers of Bangalore have taught us that. I mean, the summers in Bangalore have never been this bad. So got to be something that's happening on the macro side of things in the world. So yeah.
So, Harshit, I guess, globally and in India, institutional investors have been looking at sustainability as a space, or ESG to be more specific. How do you see this kind of trickling down to retail investors such as myself? And especially in India, what's that looking like?
So one thing that when I usually pitch Pyse as a product to a retail investor, what I tell them is if institutionals are doing it, if there's a person who's putting in 100 crores into a single project, they must be doing something right. So you don't need to build confidence on whether the technology is working or not. It is as a matter of fact, working. So, and then that's why the adoption is this high, right? The only challenge is how do I make it accessible to you? And the biggest challenge usually is the ticket size of it. And that's what we have solved for. So if you're investing on Pyse in India, the minimum ticket size is 5,000 rupees. So we take a project, we chop that down into smaller pieces of investments. We pool all of those investments, and that's what Pyse comes in and manages, right? So we collect investments from various investors, put them in an SPV, collect that investment and then build that project out. Then find partners who will manage the project for us, who will make sure that the revenue is coming on time for investors to get the returns out of it.
Got it. And come back to the specifics on what exactly you guys do, or rather how you guys do it. But just in general, your thoughts on climate fintech. I know there are markets like the US, Europe is probably leading.
Correct.
India is very, very, very early days. So, what do you think is going to happen? What are your thoughts?
Yeah, so let's divide this into two parts, right? So one's the climate part of it, the second's fintech. So the fintech adoption in India has been great lately. So thanks to introduction of companies which are allowing very easy access into equity markets to invest in mutual funds, and the awareness that's being created around it. So the question comes down to climate. How do we solve for the climate bit? And that's what Europe's done very well, right? So just the adoption in terms of understanding how climate works, what you can do at a personal level to make things better for the greater good, right, is a lot more than it is in India. And I think that's really changing now with a lot of creator economy boosting, or not boosting the creator economy, making people aware about awareness, right, on what's happening in climate, what's going wrong. And I think the younger generation especially is consuming all this knowledge and is more susceptible to act much more easily on top of that. Even with the older folks now, I think the effect of climate change is so apparent now, right? So because the heat in Bangalore, all of a sudden now, the random rains that's happening everywhere, that people are coming to realize that it's something that's gone wrong. And when they start to backtrack it to what's gone wrong, they realize that it's something to do with climate. So as soon as there is adoptability on climate, I think it'll become much more easier for people to naturally adopt climate fintech on top of that. The way that we are approaching climate fintech side of things, right? So we started with the idea, because we were so passionate about climate, we started with the idea that people would come to us because we are giving them a climate product to invest in. But India is not a market for that, from how I see it. India wants to invest in returns first before they invest in climate, right? Absolutely. Yeah. So the first question that they come and ask us is, "Kitna taka doge?" So that is, what's the interest that I earn on this product, right? The good thing about the climate industry in particular right now is there's so much innovation happening that every single product that we have dealt with leads to savings for the clients that we are working for. And they lead to savings for the clients that they're working for after generating more than 20% IRR. And 20% IRR on stable assets which have been proven in terms of technology is a great return for somebody to convert into that asset class, right? So we attract people through returns like these, and then they come in and then they want to understand what they're investing in. So all of a sudden it starts from interest rates, what's the money that I'm making out of it, then it moves to climate, and then all of a sudden it gets stuck at climate. So a lot of people who started initially on our platform with how much interest is there, we did a test product with them where we like, it's a riskier asset, you'll get lower returns, but the impact is way higher, would you be interested? 60% of the people said yes, and this would not have happened 2 years ago, is my
Yeah. I do see quite a bit of change now, a lot more people talking about it. So there's, I guess, openness to explore.
I also think the risk appetite has increased. Even though climate as an asset class is not necessarily more risky than the others in terms of alternative investment, but the general risk
It's a long
averseness.
timeline, though.
Absolutely, yes, yeah, that is true. But the averseness towards risky assets, I think, have gone down amongst the new investors. Yeah.
So, what are the returns that someone can expect?
Correct. So the assets that we work with perform generally at about 16 to 20% IRR. But in India, the structure that we operate in, we need to pay the taxes on the behalf of our investors. So the investors end up getting somewhere between 9 to 12% returns. So 9 to 12% post-tax returns, which are guaranteed across the tenure that they decide to stay in. So the tenure varies depending on what the asset class it is. So for electric vehicles, it is 4 years. 3 to 4 years. For water treatment plants, it is usually 5 years. For solar projects, which are much longer, it's 15 to 25 years. Right. And that was one of the biggest challenges that we were trying to solve for, right? If I come to you and you're investing in solar for the first time, and I tell you that I'll need your money for 25 years, you'll never give it to me. No, I would not give my money to somebody else, right? So one of the problems that we solved was for liquidity.
Okay,
so,
and how did you do that?
Yeah, so we build a pool of investors on our platform. We do not collect money on our platform the time till we don't have a solid asset that's come on live. So there are investors at any given point of time who want to invest, but there is no asset at that point, right? Because we have not found an asset which, according to us, is safe enough. So as soon as you want an exit, there's a 15-day period that we require from you for us to return the money back to you, and we fill that space in by another investor coming in and investing on your behalf.
Right. And all of this happens on your platform. So maybe you can walk us through how, if I have to invest today, how does that process work?
Absolutely. So you come to the platform, you sign in, and then you are offered a set of options depending on what your risk profile, what your return profile that you're expecting, and what the impact profile is. So the usual risk return ratio we have converted into risk return and impact ratio for people to come and invest into these assets. It just made sense, right? It's a hanging. So you come and check these assets out. Each assets have their own reports in terms of what the risks associated with them are, what the returns might look like, who are the clients that we're going to work with, who's the supplier of the asset, where's the screws coming from, a very detailed report on every asset, and then you decide what you want to invest in. So then then there's a wallet option on the platform where you put the money onto, and then you invest into any of the assets. It's as simple as that. So the entire process takes 5 minutes. The reading the research part might be a little longer, but I think that's good for everybody to do it before they got into it. Yeah.
Got it. And I know you're going to throw a whole lot of jargon at me right now, but what are you leveraging any other tech to kind of reshape how the industry works,
Correct.
and how are you doing
Yes.
that?
So we realized that while we have, so we did a product market fit in India, right? So we deployed $8 million worth of asset. Our adoption rate for a project which was 2 crores, 500K, we'd fill that bracket in on an average in 18 minutes. So we knew that there's a demand for an asset like this. We knew that people are interested to invest. So why not also take the same product to audiences which already understand what the climate side of things are? So Dubai was a great place for us to start from, right? Because Dubai allows us to.
So where are you operational?
Correct. So we have had operations up and running in India for the last 4 years, and that's where we have more than 25 of our assets across solar, electric vehicles, water treatment plants running at the moment. We'll jump more into it to understand how they work, and then as an extension, now we have moved to Dubai as well. So our second set of operations launched earlier this year have been in Dubai. Primary reason being that we get access, one, to the Dubai-based investors, UAE-based investors, Middle East, and also to European investors who are interested in asset class like these. So that's where we are deploying capital at the moment. Yeah. So to do that, now the structure that we were working in India was an SPV-based structure, right? But in Dubai, when we entered the market, we wanted a structure which would make it easier for an investors
For global investors
to
to
come
come
in and
in.
invest. Absolutely, yes, yeah. And blockchain is what we found to be the perfect solution for that. So anybody who's on chain has a wallet can come to our platform now, the Dubai platform, and can invest in it from anywhere in the world. So the way that works is we have tokenized the ownership of an asset or a fleet of electric vehicles, for example, that goes on road. So what we were doing in India, that an investor would come, we'd make them a partner in an SPV, and then hence they have the ownership of the SPV which owns the asset class. To make things simpler, because this requires a lot of work in terms of the filing, the reports that needs to go
Yeah,
through,
there's a lot
no
that goes
productization that we
on.
can do, right? Very, very structured way of looking at a company. But blockchain allows us to do that. So what happens there is, let's take the example of electric vehicles. Why do we need electric vehicles to begin with, right? Where, let's say, if you give me the money to buy electric vehicles, what am I going to do? So let's understand from the back end of what happens to the electric vehicles, and then what's the structure of the money coming into that. So now there is Noon, Talabat, and Kareem, right? There's Zomato and Swiggy equivalents of Middle East. They want to do food delivery. Right now, the food delivery that they do is on petrol bikes. All the deliveries for these companies are managed by people called 3PLs, right? Third party logistic companies. So the role of these companies is they find the drivers, they find the bikes, and then they give this service as a whole, the delivery service as a whole, to all these companies, the food commerce companies. But these guys don't have enough money to buy a lot of vehicles on their fleet, right? So that's where we come in. So we buy the vehicles, we give the vehicles to them, they pay us a fixed lease for that. Then they put a driver on the bike and make deliveries for the food companies at the end of it. So that's how we are generating money. Our revenue on the bikes comes from the lease rentals that we collect from the third party logistics companies here. The biggest, why Dubai has worked out very well for us in terms of asset deployment, there's a rule in Dubai which does not allow petrol two wheelers which are in the delivery space to deliver for more than 4 years. You need to get rid of the bikes, and that becomes a very big cost, right? Because there's no resale value all of a sudden. What do you do with the bike after 4 years? But there's no rule like that as of now for EVs. So we come in, we provide electric vehicles for deliveries to all these players in the space. But now,
Do you all own these fleet?
yes, yeah. So
These are on your.
these are on our books. And then these are leased out to 3PLs, which are then used as a service for the food commerce companies at the end of it. Now, on the raising money bit, where the retail investors comes into the space, so we have tokenized the ownership of these assets, which is backed by the tokenized contracts that go into this space, right? So that comes as a form of security. How do I make sure that I will be able to give you the returns that I've promised you? Is through the contracts that I've signed with the 3PL companies here. So we tokenize the contracts that we've signed with the 3PL, and we tokenize the ownership of the bike. We combine both of them in an ERC 721 token, which essentially generates an NFT, which is proof of ownership of what's happening here. So this all of this happens on the back end. For an investor who's coming in, they come to the website very similar to the Indian website. They look what asset do they want to purchase into depending on the risk, return, and impact portfolio there, and they select buy option, and they buy the number of NFTs that they want to buy on these assets. That depicts the proportion of the entire fleet that you're going to own out of it. So that's how it works here. But to make it more interesting for blockchain users, what we have done is we have improved our proposition in terms of returns. So now we are not just focused at a 12%, 13%, 14% IRR. So one of the batches that are live right now on our platform, which is the first pool that's going to go live in January, is an electric vehicle fleet pool, right? So let's understand
India?
In Dubai. So this on the blockchain. So all the blockchain side of deployment currently is happening in Dubai. Primary reason being that the taxation in India are unfavorable at the moment. So it becomes very difficult for us to do a product in India where the returns are good enough for the investors to come in and adopt to it. So in India, we work with the SPV structure, but we are hoping with conversations with the government in the future that we'd like to bring this structure to India as well, because the structure is much more transparent. It's easier to bring foreign capital into India, which the government's been really focused on lately. So currently, as of now, deploying only in Dubai. So the first pool goes live in January, which is electric vehicles which are being bought for food delivery to be deployed in UAE. In terms of returns, what do investors get out of this, right? So through the leasing operations, we are able to offer a 16% IRR to the investors when they come and invest. The second thing that we have done is something called a deepen node. So deepen stands for decentralized physical infrastructure networks. That's essentially decentralized access to data or decentralized access to any physical networks that are available outside. For example, charging stations, right? In our case, we have data that's being collected from the operations of this bike. So the bike and the battery has telematics device in that, which collects more than 50 plus data points every 3 seconds. So we compile all of this data, and then we are able to help banking institutions, insurance folks, 3PL companies, e-commerce companies to make better decisions in terms of where the delivery should be, how to underwrite the risk of investing into asset classes like these, which generates another line of revenue for us. Based on this, we are able to offer our investors an additional 2% returns in Pyse tokens, which is our own native tokens. We have built a third layer on top of this, which is groundbreaking in its nature, because that allows other deepen projects. So, for example, a deepen project like Map Matrix, which collects navigation data. So, to understand what Map Matrix does, let's take a step back. You, as an individual, can allow your phone to record the roads that you're driving upon, correct? So that's navigation data, and you provide this data to Map Matrix. Map Matrix commercializes this data on their backend, but for you providing this information to Map Matrix, they give you their own tokens, correct? And their own tokens trade in the market. So that means they have a dollar value against that, right? So what our RW is, the real world assets, the bike in this case, allows other deepen projects to come and put their data collection modes. So that can be through our phones that the drivers are using, that can be a hardware device that they want us to install on the bike, collect data from the operations of our bikes which are doing deliveries in Dubai. So for the investor, all of a sudden the proposition is not only a fixed principal or principal guarantee or a fixed return, it's all of a sudden a Pyse token that they're earning, which is speculative in nature, right? So you can earn a lot more from there, and then you're earning additional 10 tokens. Right. So this is the kind of productization that traditional financing methods don't allow us to do, and that's why we're super excited to be on blockchain.
Oh, that sounds exciting.
Yeah.
And that's in a couple of months.
Yes.
Amazing.
Yeah.
Good luck.
Yep. Thank you.
All right. So, Harshit, you guys have already funded a range of projects in the renewable space as well as the EV space. The first question is, how do you kind of go about picking projects in these subsectors, and what other areas under climate are you looking to get into?
Correct. So we started with solar. Like I mentioned, we were working with Dexter Energy. So, and because we had insights from them to understand how the asset class works, the technological risk on the asset class was underwritten by them in terms of our knowledge of understanding, what inverters are, what modules are, which ones to use, etc. Now that we have a set of information, data on all the already operational assets, let's say in solar or for in any asset class, if you're looking for a project, we have built up this thing called Pyse verified matrix. So that has 4 sections to it. So we got operational risk, we got technological risk, we got revenue risk, and we got credit risk, right? So let's start from credit risk. So if you're setting up a project for a company, how likely is the company to sustain themselves the time till the project life exists, right? So for example, solar projects are 20 years. So if I'm going into setting up a solar project for a company which I don't think will survive more than 5 years, it's a very big risk for me. And that is why the clientele that we have worked with have been the Tatas of the world. We have worked with DMart, we have worked with Shindingen, etc. The second thing that we look at is the revenue risk, right? So in terms of what's the financial viability of us making enough returns out of the projects. And the usual parameter is that if the client has to pay lower than what they were paying for the alternative. So in terms of solar, it's the grid versus the solar project. For EVs, it is the petrol bikes versus the EV bikes. If our product is cheaper than the others, then it makes sense that they would pay us on time and then the money would flow in, right? Third is technological risk. So in terms of what asset are we using? So the modules, inverters for solar, what bike are we using? What three-wheelers are we using for EVs? And then there is operational risk. So all these assets requires operations and maintenance, right? So we look into who our O&M partners are, how capable are they to make sure that the life of the project is as we expected it to be. So we do this study on every project that we get, and any project that scores high enough according to our risk parameters goes live on our platform.
Right. And what are your IRR expectations like while picking
Correct. So
these
gross IRRs that
projects?
we usually look at range anywhere between, for solar projects, it's a little lower because it's a much secured asset class, much more understood asset class. So there it comes to about 13 to 15%. But if you look at electric vehicles, it can range anywhere between 16 to 20. If you look at new asset classes like water, which are not established yet, then the IRRs come to about 18 to 22% there. Yes, yeah.
And since you mentioned water, I did read something recently with your partnership with Boson. Would you like to share a little bit
Absolutely, yes,
more
yes. So
on
it's been a
that?
pleasure to have met Vikas. Vikas is running the show at Boson Whitewater right now, and great guy with a great product, right? So, and the product. Let me just take a minute to explain to you how the product works. In India, it is a mandate for a society, for a workspace to have an STP plant set up. So STP is the sewage treatment plants, right? Plant. All the waste water that comes out from that building gets treated at the STP plant. The next mandate that the government's given is that you can't take the water that has been processed in the STP plant and release it into the water lines underground. You need to call a tanker from the government. The tanker comes, collects that waste, treated wastewater, and then put that water into particular lakes which are designated for this, right? But this is a big hassle for the companies which are running it, right? First, it's expensive to get the tankers to get the water. On the other hand, it's very expensive for people, especially in Bangalore right now, companies in Bangalore right now, to get fresh water for their current consumption. So what Vikas has done is something that Israel, that Singapore has been doing for a very long time at a much larger scale. He has decentralized this into a smaller project, which takes the STP output water and then converts into potable water, which is drinking quality water. So the water that he converts out of the STP output is better than Bisleri right now, technically, right? And that's amazing. But the problem with that is, if I come to you and tell you, you know what, I've taken the water from the STP, and this is the water that I'm giving to you to drink, you will never drink it because there's so much stigma around it. You know what, I just flushed it down and all of a sudden I have to drink the water which has been treated from there. Nobody does that. So then we spoke to Mercedes here, and Mercedes, usually all these bigger organizations have ACs running, right? The air conditioners running, and they have chillers inside which requires water to be run through them. It needs to be clean water. Nobody's drinking it, but it needs to be used to make sure that the chillers are running at time. So right now what they do is they call water tankers. The price, average price in Bangalore, for example, comes to about 12 paisa or 12 to 14 paisa for per liter of water that you're consuming. With this technology, what we have been able to do is take the STP output. So first we have saved the cost of you sending the water back, which is the legal way of treating the water, right? We've converted this water and we are able to sell it back to you at zero capex first. We have not asked you for any investment here, only a space which to set up the entire plant, right? At the basement. It does not require more than a parking space. Right? And then we are selling the water back to you at just 7 paisa. Yeah. So there's 40% savings just on the consumption of water. We have saved your operational cost of sending the water back, and we've also reused the water that you're consuming till now. So Vikas told us about the idea of the technologies that he's built. He showed a few projects that he has deployed, and we were sold. So in terms of the impact, we were sold on that. Now the risk was the next bit for us, right? How do we go about exploring the risks of it? That's where advisors come into play. So people who have been in the water space for a very long times, we spoke to a lot of them. And once everything was confirmed in terms of what Vikas is doing makes a lot of sense, and whether there's a demand for the industry or not, we took it up to our clients. For example, Mercedes. The good thing that happens, what we have leveraged for ourselves is that we are working with so many clients across different climate solutions, right? So, for example, DMart for water, DMart for solar, ID Fresh for solar. ID Fresh are a requirement that they want to take the water which they're soaking the dals in. They make they're famous for their dosa batters, right? So they're soaking the dal, and one of the biggest operational expense for them is the water that they're soaking the dal in. So how do we convert it back for them? So then we went out looking for solutions for them. So we realized that there's a need in it for the market, the technology works, and the numbers were making sense. So and all three things boil, and then the asset was listed live, and it's one of the most appreciated asset on our website till date, primarily because water is a cheap commodity, right? So nobody associates value to water as they do to electricity or mobility, right? It's been yet, and that is the most important part. That's what we need to understand, that it'll change very, very quickly. And the problem with it changing very, very quickly is that the consumption of water is more than any other things, electricity or mobility there. So I think what Vikas is doing is great, just that it's taking some time for people to understand why it's important. But again, with Bangalore droughts this summer,
I think that's
very important.
changing, and
Yes,
people are starting to think and talk about it more.
and that's why from the news this summer, because I was sitting down for a coffee the other day, I was mentioning since this summer, all residential complexes in Bangalore have reached out to him to set up a plant there. Yes, yes. So we are in conversations to see how we can collaborate there and deploy capital into plants like these.
Right, that's brilliant. And since we're talking about, you know, people's reception
Yep.
to water, maybe we can segue into customers here.
Correct.
How are you seeing people respond to project listed? Was it a struggle? Has that eased out now? What's been happening?
Correct. So let's understand what motivates an investor on our platform to come and invest into these assets, right? So we did a quick check with them in a quick survey to understand what's the real motivation behind them. We found that 10% of the investors care about climate, so much so that they're ready to forego returns, right? So these are the section of people who are like, you take my money, you give my principal back, but just make sure there's as much impact that's possible. Then there are 30% of the people who care about both equally. They're like, you know what, I'm investing with you guys because you're creating an impact, but I also want returns out of that.
I would have thought that that ratio would have been the other way around.
Absolutely not. Again, that's the point. That's where we discussed Europe and India, right? And that's the difference that we're seeing from the European investors now we're getting on a Dubai platform. There are many more people who are coming in come from the idea of impact investment, right? And not as much as the return bit of it. And the remaining 60% in India just focuses on the returns.
But the thing is that the returns are there too.
Absolutely, exactly. And that's why it's working, right? So that's why all these people who are been on the platform, they're still investing with us. So if you were to look at a broad data point here, right, you'd say that $8 million have been invested into green projects. That the underlying statement from that line suggests that people are investing in climate. But if you deep dive into it, then you see just the interest that the returns that they're investing into, right? But that is changing now because they've garnered uh, knowledge about how these asset classes work. Or, there is something like this. They didn't even know, right? So when we listed the water project, before we listed the water project, we didn't know that there was a service like this which could convert wastewater into potable quality water. So I think that's something that we're doing as we go, and trying to make that shift increase furthermore.
So I also read something about another partnership with an organization called Mantra.
Correct.
Would you
Yes.
like to throw some light on that?
Absolutely. So Mantra Finance, they're an L1, a blockchain L1 for RWA assets, real world assets, right? So they're building this community on chain, which focuses primarily on RWAs. So they had their incubator program earlier this year, and we joined that. We were one of the 3 projects that were working with them. And now that the incubator programs ended, now we're going live on Mantra net. So the few things that we're super excited about there, right? So Mantra is the biggest RWA L1 in the world right now. The market cap's more than $3 billion. And so us promoting our product on their chain just gives us the visibility to these investors who are already live there. They also came in with investment, which doesn't hurt. So, there's that. Third, the team's very experienced and they understand. Right? So crypto space is so new that's very difficult to navigate it. So these are the people who are leading the space right now, especially the ones that we want to build into. So just the experience from there, the team, and they've been super helpful with us. But while we were doing it, we were trying to experiment what's the best way to raise capital as well, right? Like jumping between the asset and this. So we realized that the bikes that are running on ground have free real estate on them, so we can do marketing on the bikes itself, which are going around making deliveries, right? So the challenge for us is, by what we are solving for here, is how do we raise more money, right? So there's the retail investors, there's the institutional banks that we're speaking with. What are the other innovative things that we can do? So the bikes, and then we went to Mantra and we are like, would you like to co-brand with us on the bikes, right? The bikes run around JLT, Marina, across Dubai. It gives more than 1 million impressions a month. Why don't we flip the story of CAC, right? So cost of customer acquisition. All of a sudden you're spending on it. Why don't you earn out of it? So you invest into these bikes, and you will make. So they have invested in 50 of these bikes going live in January coming year, and these bikes will go around doing delivery, where it's garnering impressions for Mantra as a company, while they earn an interest on the investment that they've made, and also the cost that they have spent on marketing here. So these are the kind of few products that we are coming up live with. We are doing a program with Polygon very soon, where we are similarly launching a Polygon branded bike as we get into this. Yes, yeah.
Creative.
Yes, yeah, yeah, super exciting things, right? Again, this is what keeps it exciting, because finance by itself could get a little boring for the rest of the teams who do not understand finance, right? So at a Climate Fintech, how do we keep it more exciting for them? So these are the things we give. We give new projects to them. We come up with new ideas, and I think that's also something that puts us apart from anybody else who's doing this work in the space. Just these innovative ideas that we have been coming up with, and it's been really helping us out. So all these projects that we have done a proof of concept on, they have gone through, and the good thing is, the next time that you're in Dubai, there is a very high chance that if you order food and it's being delivered on electric vehicles, it'll be our bikes there. So that's a cool fact, right?
Very cool.
Imagine. So we are super excited about that. So whenever I am in Dubai, for example, my only role is to order food and just look out for whether there's an electric bike coming or not. So yes, yeah.
No, that's amazing.
Yep.
So maybe a quick look at how many investors have invested, how much have you actually, how many projects have you funded, what's the amount?
Correct. So the total that we funded right now is $8 million worth of investments that come from Indian retail investors. In UAE, we just started there. We've deployed $1 million into electric vehicles. India, it's broadly divided between solar, electric vehicles, and water. And the split of investment there is 70, 20, and 10. So 70% of our investments are into solar, 20 into EVs, and 10 into water. In terms of registered user base, we have more than 20,000 investors that are registered with us. Out of those, 5,000 investors are active investors onto the platform. Yes. Yeah.
So for a retail investor, while that is a good and growing number,
Yeah.
how are you kind of convincing these folks? Because I'm sure there are a lot of people who are not looking at it, some maybe who are on the
Correct.
fence. So what's the challenge? How are we trying to kind of get them to take
Correct.
into actually investing?
Yeah, I think it's a conversation. The challenge of being an online investment platform usually would be that a person who wants to invest does not have a face that they can talk to. And that's what Costa and I've made sure since we started the company, that we need to talk to our investors personally and help them understand what's happening at the back end of it. And as soon as there is a voice, there's a human that's speaking to them, I think that's what's enough to get them on the other side.
Right. Yeah, that makes sense.
It's trust-based economy at the end of the day, right? Yeah, because if somebody is putting in money on a website online, trust is the most important thing there. So, and then the only way to establish trust is a human interaction there, and that's what we do personally. Yeah.
And what is the biggest sort of, because you all are an online platform,
Yeah.
what is the biggest technical challenge that you guys are facing?
Correct.
And
So in terms,
how are you
yeah.
overcoming it?
Correct. So, I mean, in terms of technical infrastructure to set something like this, right, on the India side, is not a lot. You have a platform, you have payment gateways, there are security protocols that are already in place. We put it all together. The more difficult part is getting the right assets, right? And that's what we have figured out over the year of operations. On the Dubai side, however, where we are quite focused right now on the blockchain side of things, the adoptability of blockchain is the challenge from how I see it. So for you, for example, you've not invested in crypto till now, right? You mentioned
I dabbled.
you've dabbled, right? But for example, let's take the example of my dad, right? He actively invests, but he's never invested in crypto, right? The reason he's not invested in crypto is because for me to explain to him that he has to create a wallet, then he needs to go to this exchange where he needs to buy stable currency. Using that stable currency, he buys another native token, and then he gets returns out of that. It's a very long process, and so it becomes very, very difficult for a person who does not understand technological side of things for them to come and invest on blockchain. And that's what we are solving for. So I think as a market as a whole, blockchain is moving towards increasing adoptability and making it as simple as possible for the users. And that's where we are at right now as well. So our initial target audience for the Dubai project are the people who are already on chain, who are crypto natives, but also soon expanded to India and other countries where the adoptability amongst the common folks is not very high. And the only way to do that is to make the process seamless. Like they come on the platform, we create a wallet at the back end for them, we do everything for them. All they need to do is come, log in, and then invest.
That makes it much, much simpler.
Absolutely, yes. And that's the focus of the tech team right now at Pyse. Yeah.
And you mentioned that you have 5,000 active users. So how are you generally, as an organization, measuring success with investors?
Correct. So one, I think the biggest thing that an investment firm would look at, right? Anybody who's helping people invest is, are there any default rates? Right? 0% for us. So very happy to say that all the projects that we have deployed capital in, we've been making money every month from them as expected and paying to our investors, right? So it becomes a very big parameters in terms of how are we managing the assets. Second, in terms of how to keep the users engaged, right? So like we discussed, productization of an investment product in India, it's very tricky, right? Very difficult to do that. So that's why we are introducing a lot more things to keep our investors engaged on the Web3 side of things now.
Right. Got it. So moving to maybe a little bit more on the actual physical infra side of things and the players involved there.
Correct. Yeah.
You're dealing with a lot of stakeholders.
Yeah.
How are you maneuvering this?
Correct. I think there's a very good side to it and there is a very poor side to it, right? The poor side is managing everybody and making sure everybody is working as they're expected to work. The good side is we don't need to build expertise in-house to know how to set up a solar project or how to manage a solar project, right? So that's why we find partners who have been doing this for a while and who understand ins and outs of it, right? So we've been very lucky to have found great partners across solar, EV, and water in India while we're deploying these assets to manage these, to help us set up these projects, and even in UAE right now. For example, one of the biggest challenge of setting up an EV infrastructure, an EV base, right, is you need to have a charging infrastructure. How do you run electric vehicles if there's no charging infrastructure, right? So we've found partners in UAE. We're working very closely with the government. We're the first partner EV B2B EV brand in UAE, which is working directly with the government to set up charging infrastructures there. So we make all of this happen by finding the best partners in the geography that we enter, in terms of deployment, operations, and maintenance on top of it. So yes, yeah, lots of things to take care of, but I think it all comes beautifully together, primarily because the people that we work with really understand what they are doing. So
Right. And are there, because you are dealing with retail investors as well, which means you're going to have to balance out how low you can go in terms of investment size, right? How is that going to work eventually, maybe when you start looking at bigger projects?
Correct.
Is wind in the question? Is nuclear in the question?
Correct. Yes. So, for example, the next industry that I'm personally very excited about to take up is CDR, carbon dioxide removal, right? So, biochar projects, DAC, direct air capture, and all of these come with a minimum ticket size of $2 million, right? If you want to make the economics work of it. So, for me to divide that across retail investors at a 5,000 rupee or a $50 ticket size is very difficult. And that's why institutional debt comes into play. So, while we are building a retail base, we don't want to be blindfolded to the idea that we don't want institutional money. So we're speaking to a few banks, we're speaking to debt partners who come in, and what this allows us to do, because institutional debt comes cheaper than retail investor capital, right? So because of this, if we can raise 70% of a project through institutional debt, we can also bump up the returns that we're giving to our retail investors. So that's the roadmap right now. So the time till we have to deploy $500K to $1 million in each project, that our retail investor suffices for. But as soon as we are looking towards a 2 million, 3 million per project deployment, and as we go ahead, right? For example, wind would be a much larger deployment. So we'd look to bring in banks into it. And having retail investors and operating these assets also become a great way for us to build trust with the banks here, because that's what they look at, right? They want to know the numbers, they want to see what the operational capacities are, what the cash flow statements look like for the last 5 years. So
Got it. And the regulatory landscape is obviously a challenge,
Correct.
and it's very early days. Obviously, the finance world is highly regulated,
Correct.
and now there's climate, there's projects, sectors of the project that y'all are looking at.
Correct.
But anyway, backtracking, what do you kind of need to see happening to make this sort of seamless for both you guys and
Correct.
the customers?
Yes. So I think in India, the biggest challenge that I see for the alternative investment space as a whole, right? Asset-based alternative investment space, not the VCP side of things, because that's fairly regulated right now, is that there's no regulatory authority that's managing this, right? So the view that the authorities hold right now is that because it seems fairly risky, we don't want to allow asset classes like these to grow at a very big scale, right? So, but my position on that is, if there is adoption from the people of your country, right, and if there are assets that are being deployed in your country, it just makes sense for authorities to step in and regulate something like this, because what we are doing is real work, right? We have all the scripts of where the money is going. We have assets which are live in nature, which, you know, these are tangible assets, right? So, and these are established in the same country. I would see it as a challenge if you're taking the money out, because then it becomes much more difficult to track the investments that's been done. But how I see things working out is, as soon as this industry gets regulated, and you know, that solves for a lot of things for us.
That'll push this.
Absolutely, that, because that all, yes, yeah, because investors become a lot more confident all of a sudden then, right? So yeah, in terms of blockchain, I think again, a lot of governments don't understand what's happening there, is my take on it, right? So, and that's why are very, very risk averse to anything that's blockchain related. So while India has said that you know, blockchain would work, and hence there is a taxation on that, that means that they have adopted blockchain as a technology, right? I think as soon as there are some favorable terms in terms of investors investing on chain, and better way to track those changes, we'd be in a great place to bring our Dubai product to India as well. Yeah.
That would be interesting for the Indian
Absolutely,
market.
yes, yeah.
And what about, there has been some movement, right?
Yeah.
In India on, especially on things like there's green bonds, there's social stock exchange.
Yeah.
Are these things that you're looking at as well, or?
Absolutely. I mean, when we started the company, right, one of the, who's our competition here? Our competition is bank, essentially, right? We, on the deployment side of things, because we're going to a client, we tell them, you know what, we're going to give you the money to set up the project, and the bank comes and says the same thing. But how are we doing better than the bank here is by managing this asset for them. The bank only comes and gives them the money, but all the operational headache falls on the client at the end of the day. So that's how we solve for the client side of things, right? On investment side of things, the biggest challenge with us, not challenge, the biggest competitor to us here were green bonds. So if a person's coming to me for impact investment, why not go to a green bond, right? The problem with green bonds is that they're not transparent. They give money, they raise money for projects or companies which are doing green things out there, but how do you track the real impact of what of the investment that you have made in the green bond?
Is that not part of the standard when you're listing a green bond, to kind of be transparent
Correct.
about all of this?
So so a green bond requires you to declare where the money is going, but in terms of trackability of what the emissions have, like, you know, what the emissions are, it's very difficult for them to do that. And that is why we were very sure that when we collect an investment, we would do a one-to-one analysis on, if you have invested this much money, this is the carbon offset that you would be doing, right? Or the carbon reduction that you'd be doing out there. And that also becomes a great selling point for us, because we have a concrete number, which means that we are actually capturing impact there.
And then the people can also kind of understand what that fractional ownership.
Absolutely, it's doing good to the world, right? So one of the product that's in line for us to launch, which should be out by Q2 of next year, is we want to build a personal carbon emission tracker, right? So you can plug in with Uber, you can plug in with Amazon, and we track how much carbon emission your activities have led to, right? And versus how much carbon reduction is happening because of your investments. And then all of a sudden there's a comparison for a person to understand, you know what, really, like, this is what it takes for me to reduce everything that I've done bad till now. So yeah, so these are the kind of insights that we want, because right now there are no data points, right? If I have to ask you on a personal level, how do you solve for climate change, it's too big a question. It's too big a question. How do you define it, right? On personal scale, how do you say me doing this would lead to a change by 0.2, 2.5, whatever X there, right? So the only way you can do that if you have numbers against that. And that's been the core focus of what we do.
So that actually was going to be my next question. What other areas are you looking at? Because I think when we first met,
Yeah,
you all were doing your solar projects,
correct.
your SPV models. Now you guys are in the Middle East.
Yep.
What's in store for Pyse
Correct.
in the future?
Absolutely. So, I mean, EV, we are super excited about in Dubai, right? It's a new industry there. It's been too small a market for big players to come in and really look at it. And the smaller players who have come and looked at the market did not have the capacities to set up the infrastructure for it. So, we have entered at the right time. We have the right capabilities to take it up. The reason why we are starting with Dubai is because Dubai is the center stage of Middle East, not just Middle East, right? Center stage of the world right now. Anything that happens, Dubai makes news everywhere. So we set up a structure in Dubai, and then we very quickly move into the other Middle East areas. We're already in conversations with Saudi to see how we can set up the same charging infrastructure and the EV deployment there. In terms of new asset classes coming up in these sectors, we are very much interested in looking at battery recycling. Given that we are promoting EV so much, it just makes sense for us to come up with solutions to recycle the batteries, right? So there. In India, we are super excited about the biochar side of things. Lots of things happening here. Yeah.
Nice.
Yeah.
Very interesting. And you did bring up the point on who your competition is,
Yep.
right? So my next question was basically, how are you seeing the future of the climate fintech world
Correct.
play out? Because you are essentially going into battle with the incumbents,
Correct.
right?
Yep.
What are your thoughts?
I mean, again, right? So there is a very famous line that there are no enemies or friends. They're just business opportunities at the end of the day. I mean, I don't like to look at my personal life like this, but in business, when somebody asks me on competitions, right? How do you tackle competition? This is such a big space, and we are so early into this. Anybody who's coming into the space is only going to be of help, either in terms of adoption of the crowd, or if they're coming in with capital and they have a much larger capital, in terms of understanding what kind of assets that they can deploy, the assets that they can deploy capital into. So for banks, like I mentioned, we're starting with retail investors right now, but we'd love to work with banks here, right? So if we're looking at banks as competition here, in terms of other players who are doing similar things in Europe, for example, right? There are a few companies which are working on fractionalization of green projects across Europe. We'd love to see how we can collaborate with them in terms of bringing Euro capital into Saudi projects, or taking Middle Eastern capital into European projects. So from how I see it, I don't look at it competition at all right now. Maybe that would happen for a company which starts 30 years from now when they're trying to enter the market. But it was not difficult at all for us to enter the market. The more difficult part is to establish a market now. So anybody who's on the space is only going to help us out.
Right. And there are maybe a couple of global players that I saw doing slightly similar.
Correct.
Actually, now after talking to you for a while, I know how you're different. But if you'd like to
Correct.
highlight how you are doing
I mean,
things
the way that we're
differently.
creating our investment products are super innovative, right? You can't beat that. And you can't just simply beat that. Especially that's why I'm super internally when we came up with the DeepIn and the DMM, the mining module side of things, we knew that we are creating something that will be very difficult for anybody else to replicate, right? And there's nobody else who's doing it right now. So in terms of proposition to an investor, we have something extremely unique. And in terms of deployment, our sell is very simple to a corporate, right? You have been given the mandate to go green. You don't want to use your business cash flows to establish a capex heavy renewable project or a EV project, right? So let us come and do it for us. And not only we are taking care of the upfront cost for you, we're also going to reduce your operational cost, right? So what that means is no capex, savings on operations, and no involvement in operations and maintenance of these asset classes. As a company, why would you not take it up? And that's why we have closed on a lot of big companies which wanted to move sustainably in India, and hence, and that is something that's really helped us garner trust among the Indian retail audience. Because if you're working with a Tata, if you're working with ID Fresh, you're working with DMart, that generates trust automatically, right? So and that's the same agenda that we took to Dubai as well. So hence the vehicles that are being deployed right now for Noon and Kareem. Noon and Kareem are amongst the top e-commerce, food commerce players in the country. So, yep.
No, that's all sounding great. And thanks for sharing all of that.
Yep, thank you.
My last question for you is, I know founder life is crazy hectic, right? So how do you kind of, I don't know, keep sane, I guess?
Correct. I mean, cooking, of course. Guess, right? It doesn't take a genius to guess. So cooking,
It's
I'll
absolutely therapeutic.
absolutely yes, yeah. And I don't get as much time as I'd like to cook, but whenever I get to do it. Now the problem is because I cook so rarely, I like to experiment. And that's why all the fans that I had at my home, my mom, dad, and my sister, they stopped eating the food. So like either make your classics, I will not be lab rat sir for you. So that's the fight that I've been living in my personal life. But other than that, I like to play saxophone sometime. I'm trying to learn how to tango. Yes, yeah, yes, yeah. So, but don't get a lot of time for that, so I'm not very good at it right now. But there's that. I love to watch movies. It's one of my favorite things to do. But 20 minutes into, I'm probably dozing off. So that's where I stand right now. But food, I think, number one. Yes, yeah, yeah. We should cook together sometime again.
We should, but after learning about your history, I would rather just let you do what you do and just eat.
No, absolutely. Yes, yeah. I love when people around me cook. And just the idea because when I was in Netherlands, the people that I stayed with, they hated cooking. They didn't like it, right? And 2 years into it, and I think passion kind of rubs off the other person. So because I talk so much about it, now they love to cook, right? So I love to see instances like these. Where, yes, yeah. So yeah.
No, that's awesome. And I guess that brings us to the end of this.
Yeah, thank you so much. I mean, the questions were amazing. To sit and talk with you to catch up with you after so long. This is the
Thank you so much for
excuse that I'll
coming
give.
on.
Yes, no,
Thank you so much. This was super informative. I learned a whole bunch. I'm sure the listeners have learned a lot as well. And
I understand there's so much happening here, right? In the conversation, there is all of a sudden there's blockchain, there's deepin, then there is different asset classes, there is a DAC. So if there's anything that anybody would love to connect about, I'd be more than happy, right? Because this is how the community grows. So when we talk to each other about it, etc. So if there's a
I'll definitely put some resources out with this in any case.
absolutely,
And
yes.
if there are any questions that come
Yep.
my way, I know who to send them to.
Yes.
And thank you.
Well, thank you so much for having me here. Lovely experience. Yep.
Thanks for tuning in today. See you next episode.